Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meets. Coming up, the market flinches on news of a rate rise by the US Fed, but not enough of a signal it's pulling back its onward march upwards for 2019. Top Wall Street economist and commentator James Rickards gives us his take direct from New York. Former Fairfax chairman and top-floor businessman Roger Corbett joins me on the show to share his views on the Fairfax legacy, the Royal Commission into Financial Services, and the year that was for business. And the African election threatening to stop Tesla in its tracks. We find out just why with Your Money's digital chief, Aleks Vickovich. Well, it is the silly season in Australia, we know that, but in Britain it's the Christmas pantomime season, and I find myself needing to explain to some of the young Aussies here at Your Money exactly what a panto is. Humour me, because overnight the panto was pulled right into Westminster's Houses of Parliament by the Prime Minister Theresa May, as if it isn't already a panto in Parliament, and in true panto style it ended up in chaos with cheers, boos and hisses all around, with cries of foul play over Labour leader Jeremy Corbyn calling the Prime Minister stupid woman, something he categorically denies that he did. Now, for those who have never been to a British panto with a couple of 4-year-olds in tow, it is steeped in tradition. Back to 17th century harlequins, think Shrek or Toy Story, but on stage, a variety performance of a fairy tale, typically Cinderella or Jack and the Beanstalk or Sleeping Beauty. It's renowned for big-bearded, ugly sisters dripping in double entendre and innuendo with jokes that split the sides of both little people and grown-ups. You can bet there'll be a bucket load of Brexit send-ups, of course, and huge audience participation from the get-go. Water and hard-boiled sweets thrown into the seats in equal measure.
OK, so this is the ancient castle. This is where I work. Isn't it nice? Yes. Oh, it's not council. It's very fun. It's a bit garish, some say. Some people say it's actually gare, but I don't think it's that bad, but it's garish. OK.
So stuff like that. And two things that little people wait for expectantly. A big audience ding-dong of, oh, yes, he is, oh, no, he isn't, which can be construed around anything in the plot. And secondly, the gag where a wicked creature appears behind our heroes in the audience, and the audience cries out, behind you, but of course the wicked creature disappears by the time the heroes turn around. Yeah, just like that. And the gag runs exhaustively. Well, it was those gags that our intrepid Theresa May delivered to send up Jeremy Corbyn for his reluctance to mount a motion of no confidence in the government. Have a listen to this.
He's going to put a confidence vote. Oh, yes, he is. Oh, no, he isn't. I've got some news for him. I've got some advice for the right honourable gentleman. Look behind you. They're not impressed, and neither's the country.
Well, then you just saw it. Something off script, muttered by Jeremy Corbyn. Stupid woman. But did he or didn't he actually say stupid woman? Oh, no, I didn't, was the Corbyn line, claiming he'd muttered stupid people under his breath, not stupid woman. Oh, yes, he did, came the cries from outraged Tory women, including those who had voted no confidence in Theresa May themselves only last week. Oh, no, he didn't, decided Speaker Burko, who, even after the lip readers had had a go, decided Mr Corbyn should be given the benefit of the doubt. Boo, hiss go the feminazis. We are now officially under 100 days until the Brexit withdrawal date, with preparations on both sides of the English Channel for a no deal and Britain crashing out of Europe. We can only hope for a happy ending. That's what happens in all the great pantomimes, after all. Come on, buttons, do something. Right, let's get back to some serious stuff. Now, as expected, very early in the morning Australian time, the US Federal Reserve has raised interest rates for the fourth time this year, ignoring a stock market sell-off and defying all the Twitter pressure from US President Donald Trump. Fed Chair Jerome Powell insists that a volatile market has not changed the economic outlook.
Financial market volatility has increased over the past couple of months, and overall financial conditions have tightened. That is, they have become less supportive of growth. In our view, these developments have not fundamentally altered the outlook. Most FOMC participants have instead modestly lowered their growth and inflation forecasts for next year. The projections of committee participants released today show growth continuing at healthy levels, the unemployment rate falling a bit further next year, and inflation remaining near 2%. The projections also show a modestly lower path for the federal funds rate, which should support the economy and keep us near our goals.
So the central bank raising the benchmark borrowing rate to 2.25 to 2.5%, while giving the clearest sign to date that it will go slow on additional increases as it watches the economy. The market sell-off accelerated, though, when the Fed chair said the pace of the balance sheet reduction is on a preset course, and adjusting the pace of the balance sheet reduction is not an option at this time. The number of rate rises, as I say, anticipated for next year was dropped from 3 to 2, but that wasn't enough for Wall Street. Well, for more on that Fed decision and everything else happening in the US, I spoke with Wall Street commentator, author and economic advisor Jim Rickards, direct from CNN in New York. Jim Rickards, well, a great day to catch you there. Now, the Fed obviously wasn't listening to Donald Trump's tweet. It has gone ahead and moved. What do you make of it all?
Well, the Fed is actually doing what they've been doing for the last 4 years. It's not a mystery. It seems to be a mystery to markets, but they've made their intention very clear. They're going to raise rates 4 times a year, every March, June, September, December, like clockwork, 25 basis points each time until they get to 4%. And the 4% has nothing to do with the neutral rate, nothing to do with the economy. It has to do with getting rates high enough so that if you have a recession, they can cut them enough to get out of the recession. The research is clear that it takes 3 or 4 percentage points of rate cuts to get out of the recession. The Fed's conundrum is, can you raise them that high without causing a recession that you're preparing to cure? That's not clear. And they do these pauses every now and then, but the pauses are driven by disorderly markets. You'd have to see negative job growth or very strong disinflation. We don't have any one of those 3 right now. I know the stock market's been choppy, but nothing like August of 2015 when the Chinese did that devaluation. So they'll just keep raising rates. Now, there was a little bit of happy talk. They said we're only going to have 2 rate cuts instead of 3. Well, okay, if it's March and June, see me in June, and we'll see what they're planning for September. But he didn't really change much at all, and he sort of said that. He says, we're not here to prop up markets. We're here to do our job. Yeah,
he wasn't specific about when those 2 rate rises will come in next year. Any hints?
Well, as of now, I mean, March is a long time away, but as I said, they are going to keep raising rates unless you see those 3, one of those 3 pause conditions. Right now, I don't see any of them. Could you have strong disinflation by March? It's possible. But, the other thing about the Fed, they don't turn on a dime. They will pause. They will change course every now and then. But they have to see 3 or 4 or 5 months of data before they make that decision. They don't do it based on 1 month. So as of now, I would say, yeah, they're going to raise in March, and then maybe June. There's 2. And like I say, I wouldn't rule out September. But it will depend on those 3 factors. If you see them, or certainly if you see 2 of them, then they will pause. But right now, you don't see any of them.
Remind us of those factors again.
If you see a strong form of disinflation, so the Fed uses PCE core year over year. That sounds a little bit technical, but personal consumption expenditure, core index year over year. Right, the last couple of months that has gone down. They wanted at 2%. They got there after 6 years of trying, but it's backed off now. It's around 1.9, 1.8. If you see that drop to 1.5 in a matter of a few months, that might be enough to get them to pause, but let's see. Right now, it's, as I said, it'll probably go down again because of the oil prices. Disorderly markets, this is what people don't understand. I spoke to Ben Bernanke about this. He said it's got to be down, the stock market has to be down 15% in a short period of time, meaning 3 or 4 weeks. Now, we did see that in August 2015, and they postponed the liftoff. It was scheduled for September 2015. They pushed it back to December. We saw it again in January 2016. The stock market fell 11% between January 1st and February 10th, and they did not raise rates in March 2016. So they do respond to it, but it's got to be that severe. What we're seeing now is kind of a slow grind down. Not a lot of fun, maybe the beginning of a bear market, but not enough to throw the Fed off their game. And the third one is you'd have to see job losses. Now, our job growth has come down from 200,000 a month to 100,000 a month. But that's still growth. It's still decent growth in the ninth, beginning 10th year of a recovery. So that's still on track. So again, the three factors have to be in a strong form, not just a bad day at the market.
Okay, so why do you think the market has taken such a cold shower over what the Fed has done and the comments that have been made overnight? Because it seems to be, you know, a bit of overkill in terms of how the market's fallen, isn't it?
Well, a little bit, but the market might be telling us something. So I just described the Fed model and how they think about it, and that's from you know, the folks I know at the Fed. But that doesn't mean they're exactly right. That's their model. If you want to forecast the Fed, you have to put yourself in the minds of the Fed governors and Jay Powell.
Yeah.
You can't just use your own analysis because they're not using it. But the market could be saying, you know what, the U.S. economy is slowing down. Now you look around the world. Germany was negative in the third quarter. Japan was negative in the third quarter. Italy looks like it's going to be negative. France is suffering because of the riots. UK's got Brexit problems. China's slowing down. And the U.S. is stronger, but still slowing down. So you go around the world and you have your basket cases like Venezuela and some others. It's not a great outlook. So we may be looking at a global slowdown. But if that shows up in growth, you know, if all of a sudden growth drops to 1%, that might get the Fed's attention, but you know, slowing down from 3 to 2 is not like slowing down from 3 to 1. That's a different order of magnitude. Okay. So right now the Fed's on track to raise in March, but the market may be signaling that there's trouble ahead, independent of the Fed.
Okay, short term and back to the US, this threat of a government shutdown. Now, I see on the Democrat side, Nancy Pelosi, Chuck Schumer saying he's not going to get the funding, he's not going to get the $5 billion, Donald Trump, not going to get it for the war. But it looks like there's a passing of a short-term bill to carry everybody through Christmas, which the Republicans reckon is very responsible for them. Is that right?
That's right. And this whole idea that we call it a continuing resolution or a CR, and all it means is that everybody can keep spending whatever they spent the year before. So we'll keep the government open. You can spend at the old allocation. We'll get around to the appropriations, sometime in the spring or whenever. But for now, just keep everything status quo. It does work that way, but the problem is, you do have to face up to that eventually. Now, Trump has, I would say, a political problem rather than an economic problem. He won and he ran on the wall. So did he start on day one? No, but we're 2 years in. He'll be starting his third year before long, and there's still no wall. So you're going to get to the point, we're going to get into the 2020 election cycle. Most normal countries like Australia, the UK, they have a 10-week election season. We seem to do it for 2 years. But the point being, we're going to get into that. And Trump has always had his base, and he reaches out to the middle a little bit, but he's in danger of losing the base if he doesn't build this wall. So there will come a crunch time, but they may kick it off till February. Okay. But a government shutdown by itself at this point, it doesn't mean very much. Yeah,
I see Sarah Huckabee Sanders is saying, well, we can find some money elsewhere for all of this. But in the meantime, I mean, very interestingly, Donald Trump, again by a tweet, has announced that it's been victory against the terrorists in Syria, and he's pulling out. Now, do you think that's to deflect from domestic issues? How do you read that?
Well, Trump's in a funny position. Trump didn't, when he ran, he didn't want foreign intervention. He didn't want more wars. Now, he inherited two. He inherited one in Syria and one in Afghanistan. And we support other, efforts around the world. But what he said in Syria is, look, if we're going to do it, let's do it. Let's defeat ISIS. He didn't like, Obama put some troops on the ground. They were assisting rebels, but the rebels weren't really rebels. Half of them were terrorists, et cetera. So Trump said, okay, let's go in hard, work with the Russians when we can, and wipe out ISIS. And they did that. So they estimate there are still probably 30,000 ISIS members. I don't think anybody ever thought you could kill ISIS to the last person. That wasn't the goal. The goal was to get rid of their independent state, get rid of their territory, stop the mass executions, get them out of, get them out of Aleppo, get them out of Mosul, and some other cities. And they did that. They did that very well.
Is this going to be a pivot, though, to Iran?
Well, I don't really think it affects Iran that much because the Russians are there. Now, if the Russians weren't there and the U.S. withdrew, you'd have a power vacuum, and the Iranians might rush right in. But by the way, this is a good example of Russian-U.S. cooperation. I'm not talking collusion. I think that's nonsense. But, I mean, Russia is one of the three great powers along with China and the U.S., and why shouldn't the Russians and the U.S. try to find some common ground when they can? So we're tied up in Yemen with the Saudis and the Houthis. We're working with Israelis to box in the Iranians. We're trying to get regime change through economic sanctions in Iran. So one less burden to carry in Syria is not a bad thing.
OK. Look, the other thing which has been such a focus for you and everyone really here too, the trade wars, and particularly, you know, US-China, on which everything hangs in this region too. How do you see it playing out now, Jim?
Well, you know, last January 2018, when Trump first announced tariffs on solar panels and I think washing machines or something, but it's escalated a long time from there. Yeah. I said, look, trade war is on. You can see it coming because it follows the currency wars. It's going to last a long time. It's going to cause serious damage, and you should take it seriously. Wall Street kind of blew it off. They said, no, you're just posturing. The Chinese are posturing. You know, you'll kiss and make up, and it's not a big deal. Well, here we are almost a year later, and people are waking up to the fact that it is a big deal, and it is exactly what I said at the time, which is it's going to last a long time. Now, right now we're in this 90-day timeout, but we're 15 days into it, so that time's getting shorter. The key to this whole thing is Robert Lighthizer. He's our Ambassador Lighthizer, is the U.S. Trade Representative. He's serious. He has Trump's confidence. He wants serious, verifiable concessions on theft of intellectual property, direct foreign investment, and requirements for U.S. companies to give up their intellectual property. If he doesn't get them, the tariffs are going to go on March 1st, so we're not done yet.
OK. And back to the Mueller investigation and scandals around Donald Trump. I mean, how should investors look at all of this going through into 2019?
Well, you know, after 2 years of it, I used to have some news feeds, and I turned them off because it was, you know, 99% virulent anti-Trump. This was like from you know, reputable news organizations, so I couldn't take it anymore. So I just have a nice plain Google page. I've never seen, you know, regardless of party, regardless of ideology, I've never seen more determined attacks on a president from more sources for a longer period of time, whatever you think of the issues. Now, the problem is there is no Russia collusion. Mueller's going to come out. I mean, who thought 2 years ago when they were alleging Russia collusion that the biggest deal would be a payment to Stormy Daniels, that, you know, a theory violates the campaign finance law, except it doesn't. So they've got nothing on Trump. A lot of other people have gone to jail for unrelated crimes, unrelated to Russian collusion. But the problem is when the Mueller report comes out, he'll be done. He's going to hand off to the House of Representatives. And the question is, do they go for impeachment? Now, I hope the Democrats are smart enough not to do that, but you never know. So if they go for impeachment and get it, that kind of uncertainty throws turmoil into the market. And it's not even a political opinion. Markets just don't like the uncertainty. So that's the thing I'm watching. So,
Jim, finally, going forward into 2019, we've had such a great year, really, on markets in the US, much better than Australia down here. What should investors look forward to in 2019?
Well, I think these headwinds for stocks are going to continue. You know, we are in the beginning, the 10th year of recovery. It's the second, probably soon to be longest recovery in U.S. history, but it's also the weakest recovery in U.S. history. And you're at the point now where you do have to look out for a recession. They don't happen automatically. You know, maybe this will go on for a little bit longer. But, you know, stocks achieved enormous valuations. The market tripled from, or more than tripled from the bottom in 2009. But now, you know, because of the trade wars, because of higher interest rates, because of the strong dollar, earnings are going down in a lot of respects, and stock prices are going to come down. You also, you know, the tax cut we had beginning in January 2018, that was a one-time boost, and we got a boost, but that's not going to be repeated in 2019. So a lot of year-over-year comparisons are going to suffer. So stocks will, not saying they're going to crash, but probably go down, go sideways. The best performing asset class in 2018, believe it or not, was cash, at least in U.S. dollars. It outperformed stocks and gold and everything else. So let's hear it for cash. I think it's a good time to lighten up on equities, increase your cash exposure, you know, I always recommend a slice to gold, not all in, but, you know, 5 to 10% kind of seasoned to taste. And gold is in a new bull market which started in 2015.
OK, well, Jim, we always love getting your insights. Great to have them at the end of the year. Wish you a very Merry Christmas. Look forward to catching up next year.
Thank you. Merry Christmas.
Now, after the break, former Fairfax chairman Roger Corbett weighs in on the biggest merger of the year and all the other big business stories of 2018.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Roger Corbett is one of Australia's best-known senior business leaders, and he's had quite an innings so far, most prominently as CEO of Woolworths in the 90s, and then as chairman of Fairfax. He's been in and out of Australian boardroom. He's also been the chair of Woolies pub business, ALH Group. He's the chair of a few ASX-listed companies, namely Main Pharma, which had a huge growth story, and Malopa Energy. He's been a director of Walmart and, of course, a director of the Reserve Bank of Australia. Who better to have on the show to give a recap on the year in business? Roger Corbett popped into our studio a little earlier this afternoon. Roger Corbett, very special to have you in here. Thank you. Now, you've had a window on so many businesses in your career. How do you rate this year for business?
Pretty exciting.
Pretty exciting. Well, some would say it's been a dismal year for the reputation of business.
Well, are you referring to the Royal Commission into Banking?
Well, that's part of it, yeah.
Well, that, of course, has been a centre stage and really important. Of course, it's vindicated itself. Royal Commissions are a very valuable tool and a very powerful tool, and they've made a great contribution. If you take the Woods Royal Commission into the New South Wales Police Force, and currently the Royal Commission into Child Molestation, all very valuable, important. The Royal Commissioner carries an enormous responsibility to get...
Or Kenneth Hayne in this case.
Yes, to get the judgment calls right.
Do you think he will?
Well, I hope he does, and I think we should have a lot of confidence that he will. He's a very distinguished and experienced man. However, Royal Commissions, as important as they are during the process, what is far more important is what happens after the Royal Commission and what changes, and clearly some fundamental changes here are necessary. But it is a very delicate thing for Australia because banking is all about risk. The bankers take a risk in giving a loan. The loanees take a risk in taking out a loan, and the shareholders take a risk in buying shares, and the people that loan to banks take a risk in loaning to banks. And if the outcome of all this was to damage the entrepreneurship, which in fact is risk-taking in Australia, it'd do our economy and our ability to grow in the future in relationship to the world a lot of damage. So the post-Royal Commission era and the Royal Commissioner's actual report and his final conclusions will be enormously important in setting the stage for what comes after. What
do you make of how some of the top business leaders have fared in the court of the Commission? Some of them have done okay, some of them have really struggled. I mean, all the way up to recently, you've seen the change in Ken Henry, for example's stance, chair at the NAB, his AGM this week, and he's acknowledging, told a lovely story about acknowledging to his wife that his wife acknowledging he could be pompous sometimes if he wasn't actually when he was being grilled. I mean, there's a big change, isn't there, in how some of our top businessmen are treating this?
Well, when you're trying to defend the indefendable, it's pretty difficult to look good. And remember that a lot of what the Royal Commission looking at has happened in a period pre the current management and the current chairmanship, particularly in the case of Ken Henry. the Royal Commission has discovered unjustifiable behaviour, in some ways disgraceful behaviour. But remember what they're doing in a Royal Commission. They're focusing on particular elements that clearly look very bad. Whether that's a reflection of the whole of the spectrum of that entity and banking is another question. And of course we all know that there are thousands and thousands of transactions that are completely normal, and thousands of people that work in those banks that are fine people.
But I guess I was saying that there's a lot of humble pie now being eaten, and do you think Kenneth Hayne appreciates this?
Commissioner Hayne has got to look a lot beyond these examples, and he's got to make judgments about the culture and broader issues of management and control, and to be sure that he sets a stage so that whatever happens afterwards, our banking sector afterwards is better and stronger than it was before.
All right, let's move to, clearly one of the big deals of the year, which is the merger between Nine and Fairfax. Now, you chaired Fairfax for 5 years. How do you see the Fairfax legacy now, looking back?
Well, I'm of course sad that the name Fairfax is passing.
Do you think it's gone forever, by the way?
Well, it's certainly gone for the present.
Yes.
Who knows beyond that? But I am pleased that a commercial arrangement of a merging of media assets has been brought about, because that merging is necessary in a digitally changing world that has absolutely revolutionised the distribution of news, its collection, people's access to it, social media, the whole of that area. And it's got to change, and the collecting of it and distribution of it has really got to be in one entity to get the economies and the efficiencies that you need to get.
Fair to say that News Corp was ahead of the curve compared to Fairfax at the start of all this? In terms of adapting to the new landscape?
Well, I think they're such different animals.
Yes.
Rupert Murdoch has led this organisation over a lifetime. It's now an international operation.
Yes.
And it had digital and film and other assets, and it was a really different animal to Fairfax altogether. You
had your moments, didn't you, when you we're talking about spills and strikes at the moment with some of our companies, but you, of course, while you were chair with Gina Rinehart, wanting not only to be a shareholder but to actually have quite a lot of influence with Fairfax, she organised a first spill. She nearly pushed for a second, didn't she? Sorry, organised for a first strike, nearly pushed for a second.
Well, I think there's a range of views of Gina Rinehart's venture into that. Of course, we at Fairfax welcomed anyone that was investing in our shares.
Yes.
Mrs. Rinehart had certain requirements that the board were unable to accede to.
That was on the editorial front?
She was, no, not on the editorial front. She wasn't so keen on that, of course. But out of all that, we got a new director on the board called Jack Cowan.
Indeed.
Who was an outstanding director. So that was certainly a good thing that came out of that interlude. You
brought in Greg Highwood, of course, who then went on to run Fairfax and drove the turnaround at Fairfax. How do you see his time there now?
Well, Greg was in position long before the Rinehart episode, I could say.
Yes.
Well, he's done an excellent job. And so's Nick Falloon, who followed me as chairman. I think for the stakeholders in Fairfax, of which there are many, this was the best resolution given the course of events that had preceded it.
This resolution of Nine and Fairfax?
Fair. Yeah. Yes. And the hiving off of Domain, which is a very good asset in itself. So the shareholders ended up with a holding in Domain, and a holding in now Channel 9, And of course, it'll all depend where those shares go in the longer term. But
yes.
the value
Well, how do you see it? Because of course, Nine has had this spectacular year, hasn't it? I mean, in February, share price went up, and you know, the advertising revenues were really strong, and they were able to use that leverage to buy Fairfax. I mean, do you see it as a merger or a takeover? How do you see it?
Oh no, it's there's no such thing as a merger. There's always one major partner,
yes.
And it's clearly Nine, and they've called the tune. Look, I think merging those assets will make a far stronger media company. I think the danger in a situation like this is the stronger company always overestimates their own intellectual property relative to the company they take over. And I think they need to make sure that they don't lose very valuable intellectual property in Fairfax that they've in fact paid shareholder equity for. I think Nick Falloon being on the board will be an enormous value to them, because Nick has not only known Channel 9 in a past life extremely well, probably better than maybe anyone on the board of Channel 9 at the present time. And of course now he knows Fairfax very well, and I'm sure Nick will be a very valuable ingredient to getting that balance right.
So when you say protecting Fairfax intellectual property, what do you mean exactly?
I mean that intellectual property has a characteristic. It always has two legs walking underneath it. And you've got to make sure that you respect the people that have that property, and you integrate them properly into the company. And that'll be a challenge for the management of now the Nine network.
All right. Well, we'll see how we all go. Government.
I'd just like to say this, though. The Fairfax name in Australia is a really proud one. And there have been some outstanding members of the Fairfax family that have made a great contribution to Australia. Sir Warwick, of course, led the business for many years. James Fairfax was an outstanding chairman for a period of time and a wonderful benefactor to the people of Australia. And Sir Vincent Fairfax and his wife, Lady Nancy, were outstanding people. Of course, he was a benefactor of the Vincent Fairfax Foundation, which exists today and is an enormous contributor to the culture of Australia. These are outstanding personalities. Well, Tim Fairfax is, of course, in Queensland, has been chairman of the Salvation Army, and many other major things. The Fairfax family. I'm sure
the brand's sitting there. I'm sure it'll come back some way, shape, or form.
Well, they're a wonderful family.
All right, we'll move on to more broad things. Government intervention now seems to be everywhere at the moment, particularly in things like banking with the bank levy, but also particularly in the energy sector. Is this a good thing?
Well, in my view, the best way to get the best out of the economy's resources is in free enterprise. And the more you tinker with the movement of free enterprise, the more you create a cost impost on the country. And in the final analysis, we're in competition with the rest of the world.
But do you agree with the government that says, for example, having a big stick to break up energy companies or putting in a default price for electricity, this actually needs to be done because the market has gone wrong enough to justify intervention?
No, the government already has sufficient powers through the Trade Practices Act to control competition. The problem with energy is the government keeps on interfering with what the energy companies can do and not do. And this debate that rages over coal, this debate that rages over lots of other things, the government has almost become impotent in making any decisions.
All right.
And as such, has caused the industry to be impotent. What we should be doing in Australia is we should be moving as quickly as we can to the next stage of emissions-free, and that's nuclear power. And why Australia isn't moving in that direction, and that a small or a body of the community blocks that process, is, in the long term, very bad for Australia.
Right, which brings me finally to one of your other jobs at the moment, which is going to be really running the Warringah Tony Abbott's seat during the next election campaign. Is that right? And how do you think he's going to go? Well,
first of all, I'm chairman of the election,
yes.
the electoral thing.
Yes.
We've got people running the campaign who are outstanding,
yeah.
and I won't be doing too much of that because there are far better people at me at doing that.
What do you make, if I can, Roger, what do you make of the people who say, really, Tony Abbott should have left the scene a long time ago, and one of the reasons that there is so much disunity in the coalition and the Liberal Party in particular is really him?
No, I disagree with that. I don't want to reopen the whole thing, but when Tony was Prime Minister, he put Turnbull in his cabinet. When Turnbull became Prime Minister, he didn't put Turnbull in his cabinet. Tony Abbott in his cabinet. And Tony Abbott was free to speak his mind. And Tony Abbott is a man that has clear views, and unlike a lot of politicians, he has his views, he holds to them, and even when he's under fire for having those views, he stands up for them. He doesn't type of water them down as lots of people do. It therefore makes him a controversial figure. However, Tony Abbott is a very popular candidate in Warringah. I'm not saying there's some people that are against him, but it'd have to be an extraordinarily strong alternative, I think, to put, for Tony to lose the seat. I think he's going to win it clearly.
Well, it's going to be a very exciting election. Roger Corbett, I do thank you for coming in, and happy Christmas.
Thank you very much.
After the break, the highs and lows in Australian retail for the year. The Australian's Eli Greenblat joins me next.
This is Ticky on Your Money, covering the big business stories.
Welcome back. The Prime Minister has met with troops stationed in Iraq for some pre-Christmas festivities. While he was there, he met with the Iraqi Prime Minister to reaffirm Australia's commitment to a presence in the region. Well, for more, Sky News reporter Annalise Nielsen joins me live from Canberra. Annalise, this is something that Prime Ministers sometimes do. They just pop up, don't they, with their Christmas message. But how did it go?
Well, it seemed to go quite well. The Prime Minister jetted over there. As you say, it is a regular affair, but many were touting that it was a surprise visit. They do tend to keep it under wraps for security reasons until he does pop up. But he did meet with the troops. He had quite a few presents on hand, and he had some messages of thanks. He also reaffirmed Australia's commitment to maintaining a presence in the region, because he said when he met with the Iraqi Prime Minister, there was still that very strong invitation and welcome for Australian troops to be there. We have about 800 soldiers there who help with training the local security staff and those specialist operations teams, and it's really helped the Iraqi people at least rebuild some semblance of an infrastructure there, and it's something that the Prime Minister has said is really important going forward.
And a bit tricky to go on to Afghanistan at the moment.
Well, we're not actually 100% sure where he is right now. We've just been told he's at a military headquarters. But yeah, this is all very sensitive stuff, Ticky.
Yeah. Look, and presumably, who knows whether he actually got the message from Donald Trump, which was tweeted out that the American troops were going to be pulled out of Syria, because that's the way news gets delivered. I wonder if he actually got a phone call.
Wasn't it extraordinary timing that it was the same morning President Donald Trump was pulling out, that Scott Morrison was there saying that, hey, we're not going anywhere? But it does seem like the US does act quite unilaterally in these instances, and Donald Trump is known for making his captain calls, as we like to call it, but it seems like it wasn't actually coordinated, that this was in the pipeline for quite some time, and it was always on the cards to be meeting with the Iraqi Prime Minister, so maybe we might be reading a bit too much into it there. I'm sure we are. I'm sure it's all completely chaotic. But back home, of course, there's a few other things going on. Bridget, and after Andrew Broad and the disasters there, that seat, that National Party seat, is now looking interesting. Bridget McKenzie might be going there, is that right? Yeah, it is an interesting move that is being touted as a potential for Bridget McKenzie. As a senator, she's definitely made a name for herself as one of the only 2 women in the Nationals Party, and she has been a strong performer. And so the idea is that she could run in Mallee and as a lower house member then actually be within leadership contention. But this is a very parochial seat in Western Victoria. It is known for being quite traditional, and it seems like because she's not from there, it could be an issue when there are a number of women from the area who have also raised their hand to say that they would like to run as well. It's likely to be an issue that the Nationals are going to have to grapple with next year. They've certainly, by the leader Michael McCormack's own admission, are having a problem with women right now after the Barnaby Joyce affair and now the Andrew Broad scandal with his sugar baby meet-up in Hong Kong. It does seem like they do have a lot of work to rebuild their trust with women in the country. They're known for being a party based on family values, and they really do need to get back to that to win back trust with the election just a few months out.
Yeah, well, as I say, Prime Minister overseas at the moment, and then we have the Don Harwin stuff, you know, with Angus Taylor, you know, just on message, on message. But you walk up and down and talk to backbenchers all the time. How do you think the mood is in the Liberal Party?
It certainly seems like everyone needs their holiday break. Going into those last sitting weeks, it did seem like that everyone was feeling a bit depleted. It has been a really busy year. I'm only new to the press gallery really in the last 6 months, but there has been a record number of by-elections in the last year. Just that alone drains people's energy and drains a lot of bank balances as well. But it's that's on top of all this internal turmoil within the Liberal Party and the Nationals. They have a big effort to turn things around to go into the next year as a united team.
Great for journalists, though. Annalise Nielsen, thanks very much.
Yeah, thank you.
OK, moving to markets now, and what a big year in 2018 for our Australian retailers. We had the ups, like the Coles demerger and the big Westfield Unibail-Rodamco deal, and the downs, like Myer's share price and the ongoing battle with major shareholder Premier Investments. Well, here to recap it all and give an outlook before Christmas is the Australian's senior business reporter Eli Greenblat, who joins me from Melbourne. Eli, what were your picks for the biggest stories of the year?
Hi, good afternoon. Look, I think the number one pick in terms of size has got to be the Coles demerger. Wesfarmers finally kind of letting go of Coles and floating it off in a $20 billion deal. Coles listing in its own right as an independent company for the first time since the 1980s. And what we're going to see there, Ticky, is a real fight between Coles as an independent company for the first time in decades and Woolworths as an independent company for a long time. So we're seeing a fight there, Coles v Woolies. But of course, as you said there, I think the ongoing fight between Myer and its biggest shareholder, Solly Lew, will be the big news. And I think it will be the big news of 2019. I think what we need to look forward to is really in January, the results, the early results for Myer, how they go in that crucial Christmas Day, Boxing Day sales, just how good it is or how bad it is, and what that will then trigger from Solly Lew.
Right, and do you have a forecast for what happens to Myer next year?
Well, look, I think it's really tough. I think it's a tough market in terms of the demand, in terms of consumers and how they're feeling, in terms of how the consumers can spend their money, with a lot of strains on the family, on the household budget, with with mortgage costs and living costs and energy costs, but also even the weather. Even the weather is against Myer. When you've got that kind of awful weather across the east coast in terms of rainstorms and thunderstorms, that's going to hurt fashion sales. So I think it's going to be very tough for Myer. We're going to see how they go kind of mid-January in terms of those Christmas and Boxing Day sales. And I think, Ticky, if the results are not good, if the results are quite bad for Myer, I think it's really game on, and I think the pressure will be on the larger investors like Jeff Wilson from Wilson Asset Management and Anton Tagliaferro from Investors Mutual, where they have to finally give in to Solly Lew, and Solly maybe gains control of Myer in the new year.
Wow, OK. Well, we'll be watching that with you, of course, closely 2019. More broadly, retail's had a bit of a tough year. There's been, you know, lots of closures, haven't they? And the regulators have also been looking over businesses like Afterpay. It's been quite tough, hasn't it?
It's been a really bad year, I think. A lot of retail collapses. Toys R Us early in the year, which was a massive collapse for the industry. Then later on, Roger David, the 4th biggest menswear company in the country. Just last week, or this week, Laura Ashley, there's another collapse. And probably a half a dozen other collapses during the year. So it's been a bad time for retail. A lot of stores closing down, a lot of empty shops. And that will probably continue into the new year. A lot of administrators, a lot of those organisations that look after those kind of companies in administration or liquidation say that they've been contacted by other retailers that are in trouble. So I think we're going to see a lot more collapses in the new year. You know, Ticky, a lot of those retailers, Christmas is just so important for them. They make the bulk of their profits in the kind of December and January period. So if they can't make money then, they're going to collapse straight away. And that's the concern, that we're going to see a lot of more collapses in the early year. And then, yes, you're right, Afterpay and those kind of buy now, pay later services. There's a lot of concern out there about the indebtedness of the retail, of the consumer, just how much debt the Aussie shopper is holding, both in terms of their personal debt and also their mortgage, other kind of overdrafts. And that's going to really affect consumers, because if that's really going to affect retailers, because if shoppers start to pull back in terms of what they're spending, if they face those bills in January from Afterpay and other service providers and they can't pay it, they're really going to start to be pulling back on what they're shopping.
All right. Well, any upside, do we think? I mean, any new players coming into the market? Any green shoots?
Yes, certainly there are new players all the time. I suppose there are players coming in as players exit. I think, you know, the one to watch is Kaufland. Kaufland should be coming in end of 2019, maybe early 2020. Kaufland have already issued their planning, their kind of construction plans with local councils for Melbourne. They've got the first 6 Kauflands on the drawing books right now. They're looking to open 6 Kauflands in Melbourne in the new year or in 2020. That's before councils, it's before the minister, the Victorian planning minister, and that's really going to shake up the industry. I think Kaufland in the new year or in 2020 is really going to shake up that grocery sector. They've got deep pockets, they're very experienced, obviously in Europe, and they're really going to take the fight to Coles, Woolies, Aldi and Costco.
Right, OK. Well, look, it's been terrific to have your insight over the year, Eli Greenblat. Thank you very much, and hope it's a better year for retail next year. Thanks very much.
Yeah, hope so too. Thank you.
I should also thank Annalise Nielsen, actually, for all her contribution on the Royal Commission and in politics this year as well. After the break, Tesla potentially in trouble due to the election in the Congo. We'll get the latest with the editor of yourmoney.com.au, Aleks Vickovich.
Now, back to Ticky.
Welcome back. Well, let's go to the Democratic Republic of Congo. It's Africa's top copper producer and the world's leading miner of cobalt, a mineral essential for the batteries that power electric vehicles and mobile devices. Congo produces 2/3 of the world's supply. One analyst called it the Saudi Arabia of the electric vehicle age. With demand skyrocketing, the price of the metal has tripled since mid-2016, and at one point it's quadrupled. But what lies ahead for the mineral, considering there's an upcoming election in the DRC, and what impact could this have on cobalt-reliant companies such as Tesla? Well, for more, I'm joined by the editor of yourmoney.com.au, Aleks Vickovich, who joins me live at the desk. Well, look, we wouldn't be talking about an election in the DRC, would we, other than the fact that it's really going to impact the global community, potentially.
Yeah, that's right, Ticky, and I think we don't talk enough African politics in general on Your Money, and we decided to do something about that. So at yourmoney.com.au, we've got a story that looks at this upcoming election, which is on
Joseph Kabila, yeah?
That's right. So Kabila has been the president of Democratic Republic of the Congo since 2006, which by African standards is not a long time. Well, it is. I mean, it could be a lot longer. I mean, many of them stay for decades.
Yes, that's true. That's true.
Interestingly, though, the constitution of the DRC, that's right, the constitution constitution of the DRC says that there's a 10-year limit. So he was meant to go in 2016, which is quite a while extra when you consider that's the full length of the Trump presidency. So this Sunday there is an election. He's not running, but of course one of his appointed successors is. And I spoke to a journalist today based in Congo, Brazzaville, the neighbouring country, and she said, you know, the opposition is not doing well, a range of problems going on with the election there. So sadly, many of the problems that are often present. Why is the election result going to impact the production and access to cobalt? So as you say, Ticky, I mean, the Democratic of the Republic of the Congo, perhaps best known for being the host of the Rumble in the Jungle, apart from that, best known as really a place that has vast mineral wealth, as you say, and in particular cobalt. And Joseph Kabila, in his post-constitutional recent years, has been a lot tougher on some of the foreign miners that have been operating in the DRC, and has really been consolidating power and consolidating market share for some of the state-owned enterprises, a number of which his family, the First family, has all sorts of financial ties to, of course. And so there is a flow-on effect from that. As well as that, the outcome of the election will have a big impact on the politics of the country, which is, you know, really mired in conflict and has been for some time. And in the eastern region, there are a number of rebel groups who sort of control mines, artisanal mines, in that area where they're producing this cobalt. So, you know, whatever happens this weekend, mining companies around the world are looking closely. And indeed, not just the energy companies who are, you know, a bit more used to operating in these kinds of complex developing countries, but also the tech giants. Aleks Vickovich from Your Money, thank you so much for joining us. It's been, well, we will watch over the weekend, but it's quite interesting how it might affect quite a few miners, so thank you very much. Right, well, that's all for the show tonight. Tomorrow night, retiring APA, well, he's not retiring too soon, but next year, retiring APA Group CEO Mick McCormack. We'll see you tomorrow night at 4:30 p.m. or again tonight on Catch Up at 10 p.m. Thanks for your company.